Get ready for the week's hottest TSX stock recap. NorthFlow Finance AI tracked 8 game changers, and we're breaking it down for you, week of July 27th. We're kicking off our weekly review segment with ZDC.V, a stock that caught our attention when a signal was detected on May 22nd. This signal was triggered by a key technical indicator, which we'll dive into in a moment. The MA Golden Cross Plus volume surge signal is a bullish indicator that suggests a potential trend reversal, and when we saw it on May 22nd, it meant that the stock's short-term moving average had crossed above its long-term moving average, accompanied by a significant surge in volume, which was up 163.2%. At the time, the RSI was at 47.7, indicating that the stock was not overbought, and the entry price was $6.10. This combination of factors suggested that the stock might be poised for a rally. This week, however, ZDC.V declined 5.6%, opening at $5.15, reaching a high of $5.23, and a low of $4.79, before closing at $4.86. This decline may have been a reality check for investors who were optimistic about the stock's prospects after the signal was detected. The question now is whether this pullback validates the original signal or if it's just a minor setback. The weekly performance suggests that the stock may be experiencing some near-term volatility. In recent news, there have been some concerns raised about Zcor's earnings being a poor reflection of its profitability, which could be contributing to the stock's decline. This headline may be weighing on investors' minds as they reassess the stock's fundamentals. The news may have also triggered some profit-taking, given the stock's recent run-up before the signal was detected. As we look ahead to next week, investors should watch for any further developments on the earnings front, as well as the stock's ability to hold above its recent lows. If the stock can bounce back from its current levels, it may be a sign that the original signal is still intact. Now let's move on to our next stock. We're taking a closer look at GRZ.V, a stock that caught our attention when our system detected a signal on July 7th. This signal was triggered by a key technical indicator, which we'll dive into in a moment. The MA Golden Cross Plus volume surge signal is a powerful combination, indicating a potential trend reversal, and in this case, it was accompanied by a significant surge in volume, up 679.3%, which is a strong vote of confidence from investors. At the time, the RSI was at 45.2, suggesting that the stock had some room to run before becoming overbought. With the entry price at $6.60, this signal was certainly worth exploring further. This week, GRZ.V declined 1.9%, opening at $6.44, reaching a high of $6.52, and a low of $6.31, before closing at $6.32. While this decline may seem counterintuitive given the bullish signal, it's essential to consider the broader market context and the fact that the stock is still holding above its recent lows. This performance doesn't necessarily invalidate the original signal, but rather suggests that the stock is consolidating before potentially making its next move. The weekly range was relatively narrow, which could indicate a lack of conviction among investors. In recent news, Gold Reserve provided an update on the Citgo sale process, which may have contributed to the stock's decline this week. This development could be weighing on investor sentiment, and it's essential to monitor how the situation unfolds. The update may have introduced some uncertainty, causing investors to take a step back and reassess their positions. As we look ahead to next week, viewers should watch for any further updates on the Citgo sale process and how it may impact GRZ.V's stock price. Additionally, investors should keep an eye on the stock's ability to hold above its recent lows, which could be a crucial test of its underlying strength. Now let's move on to our next stock. We're taking a closer look at CSU.TO, a stock that caught our attention when a signal was detected on May 20th. This signal indicated a potential buying opportunity, and we're here to break it down for you. The MA Golden Cross Plus volume surge signal is a strong indicator of a potential trend reversal, and when we saw it accompanied by a volume surge of 33.4%, it was clear that investors were taking notice. At the time, the RSI was at 70.8, which is a bit elevated, but the signal suggested that the stock was poised for a move upwards. The combination of these indicators meant that we were seeing a shift in investor sentiment, and it was worth paying attention to. This week, CSU.TO gained 12.6%, opening at 2667.2, reaching a high of 3130.07, and a low of 2642.5, before closing at 30,002.99. This performance is a strong validation of the original signal, as the stock has continued to trend upwards. The stock's ability to hold its gains and push higher suggests that the momentum is still with the bulls. The weekly range was quite wide, but the stock's ability to close near the highs is a positive sign. Recent headlines have been highlighting the value opportunities in the market, with some stocks estimated to be trading at discounts of up to 48%. This narrative could be contributing to the stock's strong performance, as investors look for bargains in the market. The fact that CSU.TO is being considered a value play could be attracting more investors to the stock. As we look ahead to next week, we'll be watching to see if CSU.TO can continue its upward momentum, and whether the stock can break through any resistance levels. We'll also be keeping an eye on the RSI, to see if it becomes overbought, which could lead to a pullback. Now let's move on to our next stock. We're looking at stock number 4, Air Canada, ticker symbol AC.TO, where we detected a MACD bullish crossover plus a volume surge signal on May 21st. This signal was detected when the stock was trading at $19.69. The MACD bullish crossover plus volume surge signal is a strong indicator of a potential trend reversal, and in this case, it suggested that Air Canada was poised for a move upwards, which was further supported by a significant surge in volume of 61.4%. At the time of the signal, the RSI was at 66.0, indicating that the stock was in a relatively neutral territory but gaining momentum. The combination of these technical indicators pointed to a potential buying opportunity. This week, Air Canada gained 6.4%, opening at $23.85, reaching a high of $26.39, and a low of $23.84, before closing at $25.37. This strong performance validates the original signal, as the stock has continued to trend upwards. The move upwards has been steady, with the stock showing resilience in the face of market volatility. The weekly gain is a positive sign for investors who took the signal. The recent news of WestJet flight attendants issuing a 72-hour strike notice could have a ripple effect on the entire airline industry, but Air Canada's weekly performance suggests that the stock is holding up well despite this potential disruption. The strike notice may actually work in Air Canada's favor if it leads to increased demand for their services. This development is worth keeping an eye on as it could impact the stock's future performance. As we look ahead to next week, investors should watch for any further developments related to the strike notice and its potential impact on Air Canada's operations and stock price. We'll also be monitoring the stock's technical indicators to see if the upward trend continues. Now let's move on to our next stock. We're looking at stock number 5 of 8, KXS.TO, where we detected a signal on July 28. This signal was a MACD bullish crossover combined with a volume surge, which is a pretty strong indication of a potential upward trend. The MACD bullish crossover indicates that the stock's momentum is shifting to the upside, and when you combine that with a volume surge of 65.5%, it's a pretty strong signal that investors are taking notice and getting on board. At the time of the signal, the RSI was at 59.2, which isn't overly extended, so there was still room for the stock to run. The entry price for this trade was $166.97, and given the volume and the MACD crossover, it looked like a good opportunity to get in. This stock had a great week, gaining 13%. It opened at $148.62, reached a high of $173.65, and closed at $168. This performance definitely validates the original signal, as the stock has continued to trend upwards. The stock's low for the week was also the opening price, so it was a pretty steady climb upwards. The strong weekly performance suggests that the bullish momentum is still intact. There was a recent headline discussing how AI is shifting from planning to execution as manufacturers deal with tariff uncertainty, and this could be a factor in the stock's recent performance. As manufacturers look to execute on their plans, they may be turning to companies like KXS.TO for solutions, which could drive growth. This shift in focus could lead to increased demand for the company's products or services. As we look ahead to next week, viewers should watch for continued momentum and whether the stock can break through the high of $173.65. If the stock can hold its gains and continue to trend upwards, it could be a sign of a longer-term uptrend. Now let's move on to our next stock. We're taking a look at stock number 6 of 8, which is LMN.V, and a signal was detected on July 29. This signal was detected based on a specific set of criteria that we follow here at NorthFlow Finance. The MA Golden Cross Plus volume surge signal is a pretty strong indicator of a potential trend reversal or continuation, and in this case, it was accompanied by a significant volume surge of 57.3%, which is a great sign of investor interest. At the time, the RSI was at 65.5, which is a bit elevated but not necessarily in overbought territory. The entry price was $24.52, and with the MA Golden Cross, it suggested that the stock was about to make a move to the upside. This stock had a great week, gaining 15.4%. It opened at $21, reached a high of $25.11 and a low of $21, closing at $24.24. This performance does seem to validate the original signal, as the stock has continued to move higher. The stock's ability to hold its gains and close near the high of the week is also a positive sign. The overall trend for this stock is looking pretty good right now. There was a recent headline that caught my attention, which talked about how shareholders can be confident in the high quality of Lumen Group's earnings. This is definitely a positive development and could be contributing to the stock's recent strength. This news could be giving investors more confidence in the company's financials, which is always a good thing. The high-quality earnings are likely to attract more investors to the stock. As we move forward, viewers should be watching to see if the stock can continue to build on this momentum, and whether it can break out above the $25 level. We'll also be keeping an eye on the volume to see if it can remain elevated, which would be a good sign of ongoing investor interest. Now let's move on to our next stock. We're taking a look at BHC.to, a stock that caught our attention when a signal was detected on July 30th. This signal was triggered when the stock was trading at $8.44. The MA Golden Cross Plus volume surge signal is a strong indicator of a potential trend reversal, and in this case, it was accompanied by a massive volume surge of 343.1%, which is a clear sign of investor interest. At the time, the RSI was at 73.5, indicating that the stock was approaching overbought territory, but the volume surge and the Golden Cross suggested that there was still room to run. The combination of these two signals suggested that the stock was poised for a breakout, and that's exactly what happened. This stock had an incredible week, gaining 52%. It opened at $6.35, reached a high of $9.69, and a low of $6.31, before closing at $9.65. This performance is a clear validation of the original signal, and it's clear that investors are bullish on the stock's prospects. The stock's ability to hold its gains and close near its high for the week is also a positive sign. The recent earnings report from Bausch Health has been a major catalyst for the stock surge, with the company's Q2 turnaround sparking a recovery outlook that has investors excited. The news has clearly had a significant impact on the stock's performance, and it's likely that the momentum will continue. The company's ability to turn things around in Q2 has clearly given investors confidence in the stock's future prospects. As we look ahead to next week, investors should watch for whether the stock can continue its momentum and break through the $10 mark, and also keep an eye on any potential pullbacks that could provide a buying opportunity. The stock's ability to hold its gains will be crucial in determining its next move, and investors should be cautious of any signs of exhaustion. Now let's move on to our next stock. We're taking a look at stock number 8 of 8, which is NCX.V, where we detected a signal on July 30th, 2026. This signal was a moving average Golden Cross combined with a volume surge, which is a pretty powerful indicator of potential upward momentum. The MA Golden Cross Plus volume surge signal is a technical indicator that suggests a potential trend reversal, and at the time, it meant that the stock was showing signs of breaking out of its previous trend, with the volume surge adding extra confirmation to the signal. With an RSI of 55.7, the stock wasn't overly extended at the time, and the volume surge of 30.3% was a clear indication of increased investor interest. The entry price at the time was $3.29, which seemed like a good value given the signal. This week, the stock gained 4.8%, opening at $3.12, reaching a high of $3.39, and a low of $3.06, before closing at $3.27. This performance is somewhat validating of the original signal, as the stock is still showing signs of upward momentum. However, it's worth noting that the stock did give back some of its gains towards the end of the week. There was a recent headline discussing NorthFlow copper and gold's cash burn situation, and how it's not a major concern, which could be contributing to the stock's weekly performance, as investors seem to be gaining confidence in the company's financial position. This news could be helping to alleviate some of the concerns that investors may have had, and is likely a factor in the stock's ability to hold onto its gains. As we look ahead to next week, viewers should watch for whether the stock can continue to build on its momentum, and whether it can break out above its recent highs. We'll also be keeping an eye on the overall market conditions, to see if they remain supportive of the stock's upward trend. That wraps up our weekly review. Subscribe for daily TSX signals from NorthFlow Finance. Thanks for tuning in, subscribe for more, and remember, this is not financial advice, consult a professional before making investment decisions.